it's going to backfire. Law of unintended consequence, right? That you're trying to save the petrodollar, you're trying to destroy BRICS, but you're going to make it stronger. A little bit like by sanctioning Russia and freezing their financial assets in 2022, it pushed other countries even more to get out of the dollar, right? To protect against such action. Tuesday, March 10th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, whatever happens vis-a-vis the war in Iran, I think one of the major blowbacks of this war, or one of the major unintended consequences, is the strengthening of BRICS. Yes, the strengthening of BRICS. And also the weakening of the petrodollar, if it's still around. No matter what happens, if the war ends today or tomorrow, and I hope President Trump is right about it being almost over, but we'll have to wait and see. There's two sides to this war, right? Whatever happens, I think what the markets are telling us, if we look at commodities, if we look at gold and silver and the dollar, what it's telling us is that we're going to have continued pressure coming from prices. Prices are going to continue to rise because all the basic necessities of life, which really come from commodities, right? From real things. It doesn't come from paper or financialization, right? It comes from real things. Yes, it's telling me not only for the US, but for the whole world. And why do I say the whole world? Well, because all fiat currencies in the world are a derivative of the US dollar. And I think the US dollar is going to continue to weaken. And I don't mean weaken versus the euro or the yuan or whatever. It's going to continue to weaken versus real money, i.e. gold and silver for that matter. Before I start, I'd like to thank all of you for your interest in the channel, all the new subscribers, all the new viewers. And if you enjoyed the channel and haven't subscribed yet, think about subscribing. So what is the purpose of my channel? For those of you who might not be aware of it, might not be too clear of it. Well, I worked for 20 years in the financial sector in London as a futures and options broker in the government bond market. I became aware of the fragility and the fraudulent nature of fiat currency back in '02 while I was still working in the city. And the reason I became aware is because I started buying a few gold coins, and I started looking into gold. I started looking into the history of money and gold. And I learned things that I'd never learned at university, in mainstream university, right? One of the reasons why I did, and I have to give thanks to, is the Mises Institute, which is the premier institute for the teaching and the making aware of the Austrian School of Economics, which is basically the opposite of what we've got now, which is Keynesian economics, big government interference, a lot of debt, right? The Austrian school is based on small government, sound money, free markets, peace as well. So I've been trying to warn the general public. It doesn't matter what your status or your economic abilities in life are. I try to warn everyone about this. And believe me, I get people from Wall Street, from the city, corporate people, I get all kinds of people. I got a message the other day from a bus driver in the UK thanking me. So that's what I try to do. As it pertains to today's topic, I've spoken about this many times before. You might want to reference one of the playlists called the Petrodollar Files. So in a nutshell, after 1971, when President Nixon basically ripped apart the Bretton Woods Agreement, Agreement made the dollar as good as gold, which meant that foreign countries could exchange their dollar reserves that they had for 35. If they had $35, they could exchange that to 1 troy ounce of gold. That was fixed from 1944 till 1971, and the other fiat currencies, they were fixed to the dollar. So they were indirectly linked to gold. But of course, the Vietnam War, yes, wars are expensive. The Great Society programs of the 60s, introduced by Lyndon Johnson, that led to massive deficit spending by the US. And what that did, that also led to trade deficits and current account deficits, which meant a lot of the European countries had surpluses of dollars, and they knew that the U.S. was inflating. So they're demanding their gold. They're going with dollars and asking for gold. And at one point, I think, the Treasury was running out of gold. So Nixon closed the gold window, which is basically closing the gold window is a euphemism for a default. But then we move forward a few years, and the United States was able, through Henry Kissinger and others, institute an informal agreement with the Saudis to sell their oil only in dollars, right? And why is that important? Well, because in the 70s, we had an oil crisis, right? The oil embargo of 73, again to do with Israel and the Middle East situation. Oil went from $3 to $12. And all of a sudden, all these Middle Eastern countries had a huge surplus of dollars. And the Americans wanted them to keep it in dollars. So they said, we'll look after your kingdom. King Faisal, I think was at the time. And all you have to do is make sure you recycle these dollars into treasuries. And there was the birth of the petrodollar. And the thing is, countries around the world, what do they need all the time? Well, they need energy. So they needed to have dollars because Saudi Arabia was the biggest producer at the time. They're the head of OPEC. They controlled basically the oil market. And for 40, 50 years, that worked really well. But in the last few years, with the challenge from BRICS, the petrodollar has been waning, the power of the petrodollar. Yes, Saudi Arabia and the Gulf cooperation countries, they're still closely allied with the United States. But they're also opening avenues to deal with China. I think it was 2-3 years ago, the Chinese president met Saudi prince and the Saudi king, and they came to an agreement, right, to deal in yuan. The Russians made an agreement as well a few years ago to help Saudi Arabia as well, militarily. But I was talking earlier, of course, about the unintended consequences of this present war, which I think we are on our 11th day, versus U.S., Israel versus Iran. And I don't have to tell you what's happened to Kuwait, Bahrain, Qatar, UAE, Saudi Arabia, right? These countries have been bombarded, mainly because they have U.S. bases by Iran. a lot of the U.S. infrastructure, military infrastructure, of course, has been destroyed. There's been collateral damage. There's been damage to these countries as well, because if you look back 30, 40 years, it was just desert there. Now, you look at Dubai as a major metropolis, and yeah, they need desalinization plants. They need to keep selling their energy, right, or else things get really bad. And I think they are not very happy with what's happened. I saw I think a billionaire from Dubai and the foreign minister of Saudi Arabia basically saying, why didn't the United States consult us before starting this war with Iran? And yes, Americans might think, why should we consult with them? Well, I think it's because the U.S. is supposed to have a deal with them. We'll protect you, and you buy our dollars, you sell dollars, oil in dollars. That's the deal. And by starting this war against Iran, by bombing Iran, and granted, the U.S. argued that they had to do it because Israel was going to do it, and if Israel did it, Iran would attack U.S. assets in these countries. So it's like, what comes first, right? The chicken or the egg? But be as it may, these countries in the Gulf, they're very, they're not happy with what's going on. And I think, I'm not saying it's going to happen for certain. I'm not saying they're going to abandon their relationship with the U.S. right away. But I think it's put a huge strain on it. And that's only going to be bad for the petrodollar. And it's not just de-dollarization that's increasing, is de-treasurization, which is buying the debt of the United States, right? So there's a story here the other day as well in the FT. This is from March 5th, about 5 days ago. Gulf states could review overseas investments to ease financial strains caused by Iran war. 3 leading Middle East economies consider options as U.S.-Israeli campaign against Tehran continues. So what it's saying here is that these countries had made agreements with the United States over the last year or two to invest hundreds of billions into the U.S., and especially like in AI. But that's all out the window now. So it's not just treasuries, but also AI. What else? Well, I've seen that after yesterday's comments by President Trump, and some will say that President Trump was trying to get the stock market to go back up. They might be right. I'm not going to speculate. The comments did come like half an hour before the market closed, and oil dropped sharply. We're going to look at oil in a minute, and gold and silver, and the stock market rallied, right? But and he said, yes, what was the exact comment he made? That the war will end very soon, right? But then after the market had closed, he said, we will relent to defeat Iran totally. So which one is it, right? But I saw as well that Iran came back, and you can see these things on X. The Iranian officials and other people on X post this stuff, and that's why I'm aware of it, because if you watch just the mainstream media, you won't see these things. But Iran said, in regards to what President Trump said about the Strait of Hormuz, President Trump said he's going to take over the Strait of Hormuz. Iran said that the Strait of Hormuz, they're open, but you can get through it, but if you really want to get through it, you will have to recall your ambassadors, your U.S. and Israeli ambassadors. He said that European countries and the Gulf countries, if they kick out U.S. and Israeli ambassadors, then they'll be able to get through to the Straits. So the Iranians are still trying. I'm not sure the Iranians are prepared to negotiate with the U.S. Why do I say that? Well, because last year, the 12-day war, it was called, it started while they're still negotiating, right? The Americans started bombing Iran while they're negotiating. This time, same kind of thing. So that doesn't help either. It's not just Iran that's been fooled. I think the rest of the world will see that, and that's why I think it's going to backfire. Law of unintended consequence, right? That you're trying to save the petrodollar, you're trying to destroy BRICS, but you're going to make it stronger. A little bit like by sanctioning Russia and freezing their financial assets in 2022, it pushed other countries even more to get out of the dollar, right? To protect against such action. So that's what I think is going on. And how is that going to affect us in the West? In the United States especially, because it's the center of the world's major reserve currency, the dollar. Well, all it will mean is that the dollar is going to become worth less, especially versus gold and silver. Interest rates are going to remain high, elevated. The economy will slow down, in my opinion. So we're going to have kind of a stagflationary environment. And it's going to be even worse here in the UK and in Europe because we're vassals of the United States, right? The UK holds more dollars than it holds gold. It holds hundreds. It's got more dollar reserves now than China. And it hasn't learned the lesson, right? The other thing I would say domestically as well, and this is coming from Fortune magazine. This came out 4 days ago, March 6th. The Treasury may need to borrow an extra 1.6 trillion to cover the hole left by tariff ruling and pay a further 400 billion in debt interest. So that doesn't help because as the petrodollar fades away, as BRICS becomes more and more important, and BRICS, I don't think they're going for a BRICS currency. They're going for a BRICS reserve asset, and that's going to be gold. And I think silver is going to be part of the equation as well. Yeah. And this is over a decade, of course. This is from the CBO. I'll put a link to this article below in the description. So it's going to get harder and harder for Uncle Sam to finance itself. But also John Bull here in the UK, we saw gilt yields rise sharply yesterday. That's the UK government bond. So I want to show you a chart of gold. Weekly chart, and I've spoken about these consolidations before because it seems that we have one every few months, right, or every 6 months or whatever, and after the consolidation it breaks out and makes new highs, and it looks I've seen other people note that as well, and that's what it looks like to me. So looking at this chart, I guess we're going to need, if we break through the high, let's see, of last week, that would, yeah, we're pretty close. Somewhere around 53, 5,400. We could see gold rally for the next month or two towards 6,500. I wouldn't put it past the price going up that much. And silver is looking even more interesting because it looks like the gold-silver ratio, yes, it's been very volatile. It dropped massively right towards the end of January because silver rallied to like 121, and then we've had the big correction. But in the last day or two, I've noticed silver has started to outperform gold, and right now we're at 58.56, just below 59. Yeah, keep an eye on that ratio, or keep an eye on silver. Silver looks like it wants to outperform. And historically, that's always been positive for the precious metals. When silver is doing well, the whole precious metals complex is doing well. Let's have a look at oil. Well, volatility, of course. We got up to 116 yesterday. This is Brent crude. We came off, but this monthly chart is showing me that it still looks very bullish. And even if the war ends today or tomorrow, I'm seeing here that oil is going to continue to go higher, and that's not going to help things in terms of affordability for people. And the other chart that looks very interesting as well, that I've shown you before, is the Bloomberg Commodity Index. I think it's ready to break out. It's been volatile mainly because of oil, but it's still looking good. And as I said, the world's changing from a world of financialization where we could get everything easily through borrowing. But now, the rest of the world, and this is represented by BRICS, I would say, and the Global South, the rest of the world that has a lot of the natural resources, they're saying we want to be paid properly, and I think that's why we're seeing this move to hard assets. So position yourself properly, I would say, financially. It's not advice, but that's what I'm doing. I'm sticking to gold and silver, to the miners as well. I'm not really heavily involved in other commodities because I think gold and silver is a good proxy, but do whatever you think is best. Do your homework. And with that, I'm going to wish you all a very good day. Take care. Bye.